Hey guys, what's up? It's me, Keren Margolis, your friendly Bitcoin Sasco Digital Assets host, and I'm here with our CEO, Omar Sebek, and we're going to talk to you a little bit more in depth about why Bitcoin has value. So we talked a little bit in the video already about the fact that Bitcoin has value because it costs money to mine Bitcoin. There's a real world counterpart to this very abstract virtual asset, right? So the question is, does Bitcoin then have more intrinsic value than, for example, a dollar? Because a dollar is very cheap to print, but Bitcoin costs probably significantly more than that to actually mine and produce?
Absolutely. The dollar is a great currency, and the currency is very easy to transact. It's very easy to move around. In the old days, currencies were actually hard to produce. The dollar used to be backed by gold. And in 1971, that peg was removed by Richard Nixon. You know, anybody could read about it. And the dollar became backed by, our GDP, and it became backed by a lot of other, dynamics in the global economy that give the dollar value. The petrodollar is something that you hear about. In order to buy energy, you have to buy energy with U.S. dollars, and that creates demand for the U.S. dollar. And on the other hand, you have, Bitcoin. And like you said, Bitcoin, it takes an investment in miners, and it takes an operational expense in energy to mine Bitcoin, and that creates value. But the other thing that creates value is its purpose, its use, and the idea that it could be, someone else is willing to buy a Bitcoin, and that price that they're willing to pay for it is a price that you see reflected in the price today. Yeah. You see reflected in every exchange. So, there's you have a currency that's easy to move, and you have a hard money, and it's the same. We just shot a video about gold, and we talked about the difference between gold, and it was the same kind of dynamic. You have, throughout history, you've had gold as being a very hard money to create, an excellent store of value, something that you could pass to other generations. It increases in value over time. It's kind of deflationary in nature versus the dollar, which is inflationary in nature and reduces value over time.
So let's get into that. That's a perfect segue. So we know what it means that the dollar is inflationary because we've heard it forever and we see it all the time. It just means your money goes less far every year. And, we know that our grandparents paid a nickel for, a can of Coca-Cola or whatever. So we get it and we see it all the time. But what does it mean? What's then the inverse? What does it mean when people say that Bitcoin is deflationary?
What they mean by Bitcoin is deflationary is they're talking about the monetary policy. So let's compare. I think
when we say monetary policy, it sounds like policy sounds like something that someone makes.
Exactly.
But is that what you're talking about?
Absolutely.
How does that work for Bitcoin, which is decentralized?
It's a great question. The Bitcoin community chooses a monetary policy. The monetary policy has been unchanged since 2009 when Satoshi Nakamoto created Bitcoin. And the monetary policy is very simple. There's 21 million units. There's a block reward schedule where in the beginning it was 50 Bitcoin that was mined for the first 4 years. And every 4 years after that, it gets halved. So it turned into 25 and then 12.5. And here we are in 2021. And the block reward is 6.25 Bitcoins. That's the reward given to the miners.
Mm-hmm. For mining blocks that are added to the blockchain. We talked about this a little bit in our in-depth video for what is Bitcoin. So if you want to go back and listen to that a little bit, we get into that a little bit more in depth. So we'll let you watch that.
So the rate of new supply is decreasing over time.
Right.
It started at 50, then it halved to 25, and here we are at 6.25, and it's going to continue happening.
So the rate of the new supply of Bitcoin, that is the flow of Bitcoin that is created, is halved every 4 years.
Correct.
So every 4 years, the supply that is created on an ongoing basis gets cut in half.
Exactly.
Okay.
And that process is going to continue for the next 120 years.
Okay.
And eventually, all the Bitcoin that could be mined will have been mined. Today in 2021, about 90% of the Bitcoin has been mined. Okay. So the remaining 10% of Bitcoin will be mined over the next 120 years. So it's super deflationary. It's super hard. And that gives the holders of Bitcoin the faith and trust that their value is going to be worth something over a long period of time. As more people join the network, as more people buy Bitcoin, it raises the value of the Bitcoin. As the ecosystem grows, as the infrastructure grows, and we see all these kind of things happening. It's actually growing faster than the adoption rate of the internet, which is the fastest technology that was ever adopted.
Wild.
So very exciting stuff. Compare that to the US dollar, and you never know what decisions the central bank is going to make in terms of increase in the US dollar.
Right.
So it's a very stark comparison.
So, when we talk about Bitcoin being deflationary, we say, well, it's going to increase in value, just like the dollar decreases in value in perpetuity. That's what Bitcoin's going to increase in value because of its deflationary monetary policy. Does that happen forever? Is there a limit on that? Is there a point at which Bitcoin maxes out in value?
There doesn't have to be a limit per se, because at the end of the day, when we talk about the price of Bitcoin, we're just talking about a pair, a trading pair between the US dollar and Bitcoin. So if the Bitcoin price today is $40,000, it's 40,000 US dollars for one whole Bitcoin. And keep in mind, one whole Bitcoin is 100 million units. And each one of those units are called Satoshis. So it could be divided down. So it could be, the fact that it could be split up into these units means that you don't have to buy a whole Bitcoin. But no, it could be, if let's say 10 years from now, the price of a Bitcoin is, $5 million. I'm just throwing that number out there, right?
I mean, wow.
We also have to consider what is the purchasing power of that $5 million going to be, right? Mm-hmm. So the numbers could be skewed on us. We saw a lot of central bank printing, Federal Reserve printing in the last year. If that rate continues, the purchasing power of that $5 million is going to be way less than it is today. So it is relative, but there's no limit to, that price is set on the exchanges. Bitcoin doesn't care about prices. All Bitcoin is, it's a blockchain, which is it's a high-tech, very fancy, decentralized database of information, and it has a history of the wallets, the people that have, their units and the private keys, and that's it. It doesn't assign a dollar value to anything. The dollar values are all being done on the exchanges, whether those exchanges are centralized exchanges or decentralized exchanges.
So the relationship of Bitcoin to the dollar then. So obviously we're understanding the value of Bitcoin in terms of dollars because dollars is what we usually use to transact.
It's what we know.
It's what we know. And it's still the incumbent, right? The dollar is in charge right now. So let's say, so then what does that mean for Bitcoin? What does that mean for the value of Bitcoin? Is it always relative to the value of another currency? And in that sense, let's say that I hold Bitcoin for X amount of time. My investment grows in value. I decide I want to buy something. I cash out in dollars, go to buy whatever I want to spend my money on, maybe some other asset, or maybe I just want to blow it on parties and drugs. I don't know. And does
Hopefully
that
not. You spend all that time saving that Bitcoin up, and you're going to spend it that way. Come on,
we're not here to judge. Who are we? Who are we? Yeah. Spend your money
Fair
on whatever
point.
you want.
Fair point.
Hopefully not. Come to us, and we'll help you maybe avoid those pitfalls. But whatever. To each his own. But does that mean that Bitcoin is a kind of placeholder for dollars, or how do I understand it? Is it its own thing? And if so, how do I understand it independent of the dollar system?
So I like to think about Bitcoin as a way to accelerate my purchasing power over time. Okay, so and I think that's kind of what you're getting to, right?
Yeah.
If you have money sitting around today and you want to keep that money for a long time, you don't want to keep it as U.S. dollars. You want to convert it into something that's going to beat inflation at the very least. It has to beat inflation at the very least. And if you're saying to yourself, I actually, maybe want to put my faith and trust in a global monetary network that's completely decentralized, where it can't be seized, and it has this incredible upside potential because more and more people are learning about it every day. It's getting adopted. Then you might say it's a very smart move to put it into Bitcoin. And a lot of people, every day, and we can see the metrics on the blockchain, how many wallets are being created. People are coming to this realization. They're getting educated, and so we're seeing that the trend has been, as long as you zoom out enough, the trend has been that Bitcoin is increasing in value because it's being more and more adopted. So it's a safe place for holding value for a long time, as long as you're not trying to get rich quick,
right?
And as long as you're keeping a very low time preference view on you're going to use this money to meet your goals for whatever those goals may be, whether it's buying a home, early retirement, or whatever other goal you have in mind.
So I think that a question that might seem intuitive to a lot of people who see Bitcoin on the news, Bitcoin makes headlines when crazy things happen, so the price moves in a really volatile way. And here we are telling people that Bitcoin is this really conservative and safe store of value, that actually if you put your money in Bitcoin, if you choose to do that after you educate yourself, which is what we're here for, and you hold on to that investment for maybe the medium or long term, that it is a really sound investment, that your money will actually grow at faster than the rate of inflation. The question I think that's obvious is, how is that possible when the price of Bitcoin fluctuates so wildly in the present? How can I then put my faith in it as a really reliable store of value for the future?
Well, remember, we're keeping a very low time preference. So I think the rule of no one has ever lost money in Bitcoin if they've invested for 3.5 years at the very least.
Right. Okay,
that hasn't happened because it's just the way the cycles work. And understanding how those cycles work, you have bull markets and bear markets. You have, we're right now in a mid-cycle correction. So we're in a bull market, which started, I would say it started around a halving, which was around July. The last halving was around July of 2020 last year. 6 months later, we saw a new all-time high get hit in December 2020, and we saw the price appreciate up to 65,000.
Yeah.
If you held since the height of 2017, then you made your money back it was December 2017. You made your money in 3 years, right, in December 2020. And that's all about understanding that that it's a volatile asset. Yeah. It will go down. It goes up 200% compound annual growth rate every year. It has a 200% CAGR. That's unheard of.
So when we're talking
an asset that's going
I'm so sorry. Go ahead.
An asset that's going to do that also has to have the volatility where it could go down 2x, like we just saw.
I see. So it's like a swinging pendulum.
Volatility works both ways.
You can't have the high without the low.
Exactly. You're not going to have upside volatility without downside volatility.
Right.
But if you zoom out enough, you see that the upside volatility is the main, the main market characteristic of Bitcoin.
Right.
Because it's always on the march. It's always on the up and up. And there's something to be said for, can this go on forever? And that's a very valid point.
Yeah.
But then you got to look at what what does the environment look like? Is the ecosystem continuing to grow? What are some of the threats? What are some of the opportunities? You have to develop a narrative. What is your investment thesis to begin with? My investment thesis in 2013 is the same as it is now. It's that central bank printing is causing, asset inflation, price rises. And if you find a scarcest asset that also has all these amazing attributes, you'll probably benefit from it.
Yeah, right.
And it's the same thing in 2021 as it was back in 2013.
So why, if Bitcoin is an asset class that is sort of unprecedented and it's deflationary and it's a really, kind of conservative pick if you're looking to invest money for the medium and long term, how is it that it seems to respond to external pressures such as Elon Musk tweeting or saying something on the news or whatever? Why is it that Bitcoin responds to that if it's supposed to be outside or transcending that kind of thing?
You got to look at the investment sentiment. When Elon Musk, I don't really understand it myself. When Elon Musk tweets, apparently people like him and they listen to him and they make financial decisions based on his tweets. There's a lot of retail investors that are into Bitcoin.
Right.
And, those tweets, they cause a lot of market activity on the exchanges, a lot of retail investment on the exchanges. These traders are coming in these investors are coming in from, they're coming in from Coinbase, they're coming in from Binance, they're coming in from Robinhood, maybe Cash App, right? Smaller exchanges. They're not what we call smart money. They're not the institutions that are making bets on Elon Musk's every tweet. Certainly not, really, I would say, professional Bitcoin investors. They're not, trading on, they may be trading on what others might be reacting to, right? So, you could be an investor that says, I think people are going to sell when they see that tweet, so I'll sell first.
Right.
There could be some of that going on. But, Bitcoin has a property that's anti-fragile. And we've seen it time and again that when there's attacks on Bitcoin, Bitcoin wins. And there's countless times through the past 12 years where that's happened. There was literally the Civil War in 2017 and Bitcoin survived and it got stronger as a result. The term anti-fragile means it's a property that the more you attack something, the stronger it gets. And there's very few, if you think of a hydra, you cut off a head, two heads grow. Right? There's very few things that have that kind of a property. You can say the internet has that property, right? The internet, in its early days was attacked, right? And it survived and it stayed neutral for a long time. Most parts of it are still neutral today, completely permissionless. It's people say air, water, internet, right? I mean, you need the internet now to survive.
You do.
And Bitcoin has the same properties. And I think Bitcoin is, probably on a path to be as meaningful to human civilization as the internet was. Even though it was totally dismissed and it was very hard to use in the early days.
Yeah.
And people said, Paul Krugman, the Nobel Prize winning laureate, an opinion editor for the New York Times, famously said that the internet is not going to serve any more value than the fax machine did. And
I remember a couple years back, there was a widespread concern that Bitcoin could be regulated out of use by the government, that the government could classify it in such a way to make it really difficult to use. Could you explain if it's actually possible for Bitcoin to be devalued by virtue of a government making it so hard to use by just placing all this regulation on it? Could that actually lower the value of Bitcoin by making it just
absolutely. I mean,
impractical?
Yeah, totally. If the government came out with regulations that made it very difficult to use, we would see the value of Bitcoin drop. There's no question about it. In terms of US dollars, it would drop. But then you also got to consider, it's only jurisdictional. It would only be in one area. The rest of the world would be, benefiting from the value of Bitcoin. There's also this idea of it's regulatory arbitrage. So a lot of very smart and bright minds that are in the Bitcoin community would probably leave the United States and go to places where they would be treated more friendly, like El Salvador, which interestingly enough, if you look at Google, the trends for real estate searches in El Salvador is way up, 400% of what it used to be. So there's this, there's that idea. There's also, history. So when the automobile was starting to become prevalent on roads, a lot of local jurisdictions, that had big horse interest, right? They were just dead set against it. They didn't want
that big horse lobby is
the
just
big horse lobby
so
was
strong.
powerful. Yeah, so they mandated that a flag man with a red flag had to meet the car at the beginning of town, and they would, walk through in front of the car waving this red flag. It's absolutely ridiculous.
They did not want people driving.
This now. It's ridiculous. We think about because Bitcoin can't be destroyed.
Yeah.
So they can do all these things, but eventually, look at marijuana, right?
Yeah.
Prohibition. I mean, anytime you try to control and regulate something that at the end of the day is a peaceful technology, right? It doesn't necessarily last. So,
and that has to do with the anti-fragility that you talked about before, right? That regulation actually strengthens Bitcoin in the sense of illuminating its power of purpose. That Bitcoin really does serve the purpose that it was designed for, and you can prove that by trying to suppress it.
Exactly. And 30% of Americans invest in cryptocurrencies right now, and that number is only growing. So I would imagine that the political pressure wouldn't necessarily be there to regulate Bitcoin.
Yeah.
And also, we live in America. We're still in a free society.
Yeah, right.
We're not a totalitarian state like China or Russia.
Overregulation is anti-American.
India just tried banning Bitcoin, and they realized that they couldn't, so they ended up removing the ban. So I think it's a risk. I think it's a tail risk.
Yeah.
I think I wouldn't weight too much on that risk. It's definitely not stopping me from continuing to invest in Bitcoin. But yeah, it is a valid risk and something that we got to keep our eyes out for, and continue to support Bitcoin so that it doesn't happen.
So in terms of institutional money, I've heard this over and over again over the years. People go, institutional money's coming into Bitcoin, and what does that even mean? So I guess that stands in contrast to small retail investors, someone like me who's putting a small amount of money into Bitcoin. The question is, who are these institutional investors, and what effect does institutional money, so big amounts of money, have on Bitcoin, on the value of Bitcoin?
Well, the first effect that it has is in order for institutional money is, big brokerage firms that want to provide Bitcoin to their clients, or they also conflate institutional with corporate, so any corporation out there that wants to put Bitcoin on their balance sheet. But I think the working definition for institutional is non-retail money, big, bank money or brokerage or hedge fund money, or big time investor money like Ray Dalio and Paul Tudor Jones and, Stanley Druckenmiller that are now very supportive of Bitcoin. So what effect does it have? First thing is it's very new. Right, institutional money is just starting to come in. There's enough Bitcoin supply out there to facilitate that capital inflow, but eventually what happens when, that supply gets, taken up.
Right.
I think the institutional money mostly are looking at it as a long-term investment. Particularly Michael Saylor, who says that he's buying it now, he's not going to sell it for 100 years. He sees it as a long-term bet. If others do, then that's just hardening up the supply. And what happens when you have a hardened up supply? It becomes harder to get. There's only one thing that happens: price goes up. So, I think this year is going to be really a pivot point for Bitcoin in terms of how it gets adopted, who's adopting it, and how the texture of that adoption reflects in how much Bitcoin is available, and then, of course, what the price of that Bitcoin will be. It's going to be very interesting to see.
It can the supply of Bitcoin be exhausted such that it's impossible to buy?
We call that a supply crunch. There's always a price that someone is going to be willing to sell their Bitcoin for.
Okay.
So the price will only go up as high as someone is saying. Once it hits a certain number, someone will throw their Bitcoin onto the exchange to sell it.
Right.
So we haven't seen a supply crunch so bad that it just went up to infinity.
Right.
And I don't think we will. It's a fantastic kind of scenario to think about. But no, generally speaking, there will be what's called a blow-off top. So a blow-off top is when the supply on a particular exchange gets basically wiped out, and Bitcoin's not showing up at the exchange fast enough, so the price just keeps rising, and it's called a blow-off top for a reason, because that typically is like the high, and then the price just collapses when the Bitcoin starts showing up and people want to sell it at those high price levels.
What's the time frame on that? Like, where was that? A matter of days or weeks or months?
Hours.
Really?
Yeah, it happens very quickly.
Okay,
yeah, it's very hard to profit from that.
Okay, so the average me,
maybe even minutes,
is probably going to
actually
miss that.
Yeah. It's actually sometimes in 2017 it was actually literally like less than an hour that we had a blow off top on Coinbase, and that was the height of the market. That's when it was leading up to that. The price went up like $10,000 literally in a month. So it doubled. It went from 10,000 to 20,000 literally in a month. And then at the end of that, there was a blow off top. You couldn't get Bitcoin, and that basically signaled the end of that bull market. Yeah. When you see a blow off top, I'll tell you when we have a blow off top.
Okay.
We'll figure out what to do then.
Is it like a blink and you'll miss it? Is a blow off top the kind of thing that you see in retrospect?
We'll all know about it.
Really?
Yeah, absolutely.
Okay.
I mean, people like me watch for these kinds of things, so I'll tell you about it.
So I have sort of one more question that I think any investor would consider if they're putting their money into something is there any scenario in which Bitcoin could become worthless?
I can't think of one, but I'm happy to entertain ideas. If you ever think of one, let me know, because I really want to consider that. I think one thing that you'll find in Bitcoin is that we're all trying to think about, how to manage risk.
Right.
That's key. Security is key. Managing risk is key.
Yeah.
The only thing I joke about this, but the only thing that keeps me up at night is that the leaders of all the central banks in the world are going to come together and say, you know what? It's time for us to be financially responsible.
It's so unlikely, Omar.
That's the only thing that keeps me up. I sleep very well, but it's the only thing that keeps me up at night.
You must sleep like a baby.
Yeah, I don't see it. I really don't see it. People talk about quantum computers, but we're 50 years out from that, and it's a very simple upgrade to, the encryption algorithm that Bitcoin uses to mitigate a quantum computer being able to hack Bitcoin. So that's not even a risk. No, I really can't think of any, honestly. But if I do, I'll let you know.
I will do a video about it.
Throw some stuff at me. I need to know about these things. I need to know what people might consider a risk.
I think that people are wondering what question to ask, we've talked about Bitcoin being unhackable and, deflationary and all of these things that make it seem very, very stable.
Bitcoin is engineered, designed, and constantly maintained so it can never be destroyed, and it can never be seized, and it can never be hacked. You have all this energy in the community to ensure that. It's a decentralized community. It's not a central authority. It's not a certain single person that could be arrested or killed or anything like that, right? So, there's really, aside maybe from the internet, right, there's really no other thing that exists that has that behind it. So I think that is that's the ultimate, value prop for Bitcoin, is that it's, it has fierce defenders.
One last question. There's really is just one last question. Could it be possible for a cryptocurrency rivaling Bitcoin to be that, but even better than Bitcoin? You know, we said Bitcoin's like gold plus. What if something came out that was Bitcoin plus? Could that drive Bitcoin towards obsolescence? I'm just trying to get at the crux of the risk of the value of Bitcoin.
There's 5,000 other cryptocurrencies besides Bitcoin, maybe more. I think that 5,000 number is from like last year, so it might be up to 6,000, maybe 7,000. Some of them are more scarce. Some of them are
more scarce than Bitcoin.
Yeah, like, you know, Bitcoin has 21 million Bitcoins. Yeah. Some of them have like, you know, even if it's 20 million, it would be more scarce, right? You know, so they try to tune some of the properties that Bitcoin has, but what they don't have is two things. They don't have the network effect that Bitcoin has, right? There's a concept called the Lindy, or it's a principle called the Lindy principle, and that is that the longer something exists, the more likely it is to continue existing. So you can think about any technology that way. Automobiles, planes. If it existed for 5 years, it's very likely to exist for another 5 years and beyond.
Right.
You know, and then there's also the optimal conditions under which Bitcoin was created. You know, was created to be decentralized. It doesn't have a marketing team. We don't know who Satoshi Nakamoto is, which is great, right? But we understand his readings, just like we don't necessarily need to know who, you know, some prophets of the religions were, but we could read the text and understand how they, you know, what they thought.
Right.
Same kind of thing. Fully decentralized. I don't know how you can recreate that kind of fully decentralized kind of. So I don't see it happening. You know, there will be central bank digital currencies, but those central bank digital currencies that are created by, you know, the U.S. government, or I should say the Federal Reserve, or created by the ECB, or, you know, China, they're going to have the same monetary policies as their current currencies.
Well, they're central. They're not decentral.
Exactly. Yeah. And they're centralized. So, you know, how will they be adopted? How will they be used? You know, time will tell.
Right.
But they're not going to replace Bitcoin. Bitcoin's going to stand unique. So, yeah, I don't see that as a risk.
So Bitcoin was made by people, but it is an entity. It's got a life.
I'd like to think of it as the first living, totally technology-based organism. It really is. It's engineered to be that way.
This is a really interesting subject because we think of Bitcoin as being so abstract, but the value proposition is so real. And so we would love to know what you think about this. What are your ideas, concerns, questions, opinions about everything that we just discussed? What would you like to hear from us next? What would you like to talk to Omar about?
And challenge us, people. I mean, come on. I mean, if you like what you hear, great, but I want to hear from people that don't like this. I want to hear critical feedback. Are we wrong about anything? Put it in the comments. We want to hear from you.
We do, yeah. Stump him. I can't. So you have to. And once again, if you like this video, please give us a thumbs up so that we know you enjoyed our content. We can make more of this for you. Don't forget to subscribe to our channel and ring that notification bell so that every time we upload a video, you get notified first. You don't miss any of our content. And we will see you in the next video. Thank you guys so much.
Thank you.